click on the yes, I'd like to join thing. So here we are. Welcome everyone, and thank you for joining the National Housing Conference for today's webinar sponsored by Neighborworks America. This is the second webinar in our sponsored series, and we look forward to hosting more throughout the year. We also hope to see you all at NHC's upcoming Solutions for Housing Communications Conference that's going to be held on March 30th. Which is, I will also note, going to be in person at the National Press Club. We can't wait to see you there. For joining today's webinar, we're happy to offer you all a 10% discount on registration using the code Shared Equity Attendee. That's with a capital S, a capital E, a capital A, and no spaces. Also dropped in the chat box. If you're interested in joining NHC as a member, you can do so online at nhc.org. You'll get weekly reports from Washington, discounts on all of our events, and the opportunity to participate directly in our working groups. Today's discussion is on federal funding, local impact, shared equity as a housing solution. Housing prices and inflationary pressure have led to a volatile market and skyrocketing housing costs. Communities who've been traditionally shut out of homeownership are now not only battling historic and systematic barriers, but also new challenges from competing investors, cash buyers, supply constraints, and overall rising costs. Shared equity models offer a range of alternative methods for affordable homeownership and equity building for low-income communities. Many communities turn to these shared models in order to counter the threat of displacement and maintain their unique neighborhood identities. This includes community land trusts, housing cooperatives, resident-owned manufactured communities, and more that you will hear about today. Community developers also use shared equity models as innovative stabilization tools that can help equitably advance their housing goals while supporting resident autonomy and preserving affordability. Our panelists will discuss a range of shared equity programs across several geographies and discuss how models can be supported at the federal, state, and local levels. There will be a Q&A discussion later after the presentation, so please submit questions through the Q&A feature for consideration by the panel. Our discussion today is moderated by Chris Siglin from the National Community Stabilization Trust. Thank you to NCST for agreeing to participate in this important conversation, and of course to Chris for all of her leadership on so many issues, as well as on the National Housing Conference Board. Chris?
Good afternoon. It was wonderful to see the hellos from around the country as we come to discuss this important and ever more timely topic. I'm Chris Siglin, Vice President of Policy and Partnerships at the National Community Stabilization Trust. And in that capacity, I direct the Homeownership Alliance, which is a practitioner-led policy collaborative of nonprofit, affordable homeownership developers and lenders. And our mission is to increase access to affordable homeownership, to narrow the racial wealth gap, increase the supply of long-term affordable housing, and revitalize communities without gentrification. So several of our members have an interest in shared equity. And as David was saying, it's an approach to affordable homeownership that takes different forms in different communities across the country. And it's a response to challenges we're experiencing in the housing market right now. Rising construction costs, rising land costs, rising home prices. How do we offer the wealth building benefits of homeownership to more families in this tight market? And it encompasses community land trusts, housing cooperatives, and manufactured housing communities. So you can look at the details of our speakers in the invitation, but we're really lucky to have Shanti Abidan, the Director of Shared Equity at Neighborworks America, who's going to kick us off with an introduction. And then we're going to move on to Tony Pickett, CEO of Grounded Solutions Network, And then we're going to hear from local practitioners. Kaya Peterson, the Executive Director of Neighborworks Montana. And finally, finishing up will be Jenny Ortiz, Vice President of Design and Development at Neighborhood Partnership Housing Services, which is an affordable housing developer in Southern California. So I'm going to kick it off to Shanti, who's going to give us an overview of Neighborworks' efforts to promote shared equity in its network of CBOs, with emphasis on community development and resident-led initiatives. So Shanti, over to you.
Thanks so much, Chris. And hi, everyone. As Chris mentioned, I'm the Director of Shared Equity Housing at Neighborworks America. And thanks so much for being here. I'm just going to share my screen. All right. So Neighborworks America is a national congressionally chartered nonprofit that creates opportunities for people to live in affordable homes, improve their lives, and strengthen their communities. We work with a network of nearly 250 local organizations to build stronger communities in every state, the District of Columbia, and Puerto Rico. And we've had organizations in our network using shared equity housing strategies effectively for decades. But we have seen this increased interest in these models in the last few years for the reasons that Chris and David mentioned. Our housing costs are higher than ever, and organizations are also really looking for solutions that empower residents and address long-term racial inequities in neighborhoods. But before I talk a little bit more about our specific program, I did want to offer a bit of a primer on shared equity housing for those of you who are new to the topic. So shared equity housing models balance the benefits of individual affordable homeownership with the community benefits of having land and housing that remains accessible and affordable to residents over time. And there are a few common features of these models that really allow this balance to happen. They start by making a home affordable to an individual or a family, and then employ some sort of resale restriction or mechanism to keep that home affordable if and when that family chooses to sell the property. So when the family leaves, they receive a portion of the equity or the appreciation on the home, and the remaining portion stays in place to ensure that that home is affordable for another family who's income qualified in the future, whether it's 10 years, 20, 30 years down the line. So the first family benefits and future families benefit. They also involve a sharing of risks and rewards of homeownership. And this is important because families or individuals in shared equity homes are supported through this shared structure to be able to weather crises better, keep their homes through financial ups and downs, but they also do share those benefits with other community members. And thirdly here, these models often have a strong shared community control aspect to them. So often in these shared equity models, there's a component where the homeowners themselves, as well as other residents and stakeholders in the neighborhood, play a role in governance of the shared equity program, which really empowers residents to have a say in how land and housing is used over time in their communities. And just to connect the dots a little bit further here, there are a few common models that have been mentioned already. We have community land trusts, which are, CLTs. These are a common form of shared equity where the ownership of the home is shared between a family and a nonprofit that represents the community. The community organization owns the land itself, and a family or individual purchases the improvements on the home or the structure of the home itself. And this split of ownership allows it to be affordable to that family or individual. And when they are ready to sell, they sell just their portion of the property, which makes it affordable for another family down the line. And the community continues to own and steward the land below. We also have limited equity housing co-ops, cooperatives, co-ops, which are another form of shared equity where there are multiple units in a cooperative and each family owns a share at an affordable price. The shared ownership structure is what makes each of the units part of what makes each unit accessible and affordable to the families. And each family or individual can sell their share to future residents when they're ready to leave that home. This carries over into the manufactured housing context in what we call ROCs, resident-owned communities, ROCs. And these are a form of limited equity co-op in manufactured housing parks, where the residents collectively own the land itself, and each family owns their own home on the property. That structure keeps the costs of their lots and their housing affordable and stable over time. And we have a great partner, Rock USA, who's a national leader scaling this model across the country. And finally, there's a model called deed restricted homes, which make homes affordable to a family with a subsidy up front, and then have stipulations built into the deed of the home that require it be sold at an affordable price in the future to a future income qualified family. There are a few other models and combinations of these models, but these are the ones that we see most commonly in our network. So what are the benefits? Why shared equity? So for one, these models make it easier for a family or individual who wouldn't otherwise have access to purchasing a home to become a homeowner and to build the wealth and assets involved in that by both having a stable housing payment and the wealth that comes with building a mortgage and benefiting from a share of the appreciation on the property. Data shows that these models do allow families that would otherwise be renting to build more assets than they would if they were in the rental situation long-term. And this more attainable form of homeownership has a role to play in helping close the racial wealth gap when it's done with other systemic changes and investments. Secondly, they keep housing affordable for future generations. So the soaring housing prices we're seeing right now in markets make it clear that we really need to invest in ways that make housing affordable now and stretch that investment to protect the home as affordable in the future so that neighborhoods can stay vibrant and diverse. And this really gets me to my third point, which is that these models stabilize neighborhoods by preserving access to land and housing over time in the neighborhood. So when they're employed with strong resident-driven strategies, they can really preserve the character of the neighborhood and allow communities to stave off gentrification and displacement. So a little bit about the Shared Equity Initiative at Neighborworks America. Our initiative was launched in 2019 when we received a special appropriation to support the use of shared equity housing strategies to create a tool to create affordable housing and stabilize communities. We've received a total of $5 million in congressional appropriations to date to support this program. And the work we're doing in the initiative really lines up with our new strategic plan at Neighborworks, which has several goals, but the first two really do line up with using shared equity. The first goal is to create, preserve, and invest in affordable housing and wealth building. And shared equity is named as a key strategy to keep housing affordable for the long term and to support the access to wealth building that homeownership can offer families, particularly in a way that's more attainable and accessible to bridging the racial wealth gap, accessing homeownership for people of color, and other marginalized communities that have traditionally been locked out from that opportunity. And the second goal is goal 2, which is to foster stronger and more equitable communities. This goal acknowledges that we need comprehensive solutions to address the complex issues facing communities and encourages place-based and resident-led efforts. And shared equity fits squarely into this focus because these models invest resources in keeping land and housing in a specific neighborhood accessible and affordable. And they do so in a way that features a strong role for resident leaders and resident owners in a community, which is part of Neighborworks America's roots and continues to be a strategic focus for us moving forward. So you can see on these slides, on the slide that we're doing this through a number of different activities. We've partnered with national leaders at Rock USA in the manufactured housing space and Grounded Solutions Network, you'll hear from later on this call. And these resources are really designed to create a variety of entry points for organizations looking to use shared equity housing solutions. So we're providing a range of different types of grants to organizations who are just exploring shared equity and whether it's a good fit for their organization, all the way to organizations who've been doing this for a while and receive capital grants for production of units and shared equity models. And later on this webinar, you'll hear from 2 of our grantees who are using these resources for long-term affordability in California and Montana. And we provide technical assistance for one-on-one support, tools and templates, evaluation, support to measure resident outcomes. But we've also created a number of trainings that are available to anyone who's interested in doing a sort of an introductory course on shared equity housing or deep diving into a few topics like multifamily strategies or the stewardship of properties long-term. So I will stop there and pass the mic to our partner at the Grounded Solutions Network, Tony Pickett. Tony Pickett is the CEO of the Grounded Solutions Network, and I will pass the virtual mic to him. Thanks.
Thank you, Shanti. And again, what a great job you've done in teeing it up and giving everybody an overview of shared equity. For my comments today, I'm not going to use slides, so I'm going to contrast a little bit and just talk about the why and the how of our work at Grounded Solutions to really scale the impact and use of shared equity programs. That's a continuation on the theme that you started, Shanti, and I hope that will carry through the rest of the presentations by panelists today as well. Just by way of background, our mission at Grounded Solutions is to cultivate equitable and inclusive communities by advancing access to housing with affordability that lasts for generations. That affordability goes well beyond the typical term limits of most housing policy and subsidy programs and requirements. And so shared equity is one of those types of approaches. Our work at Grounded Solutions uses a multifaceted approach to achieving long-term housing affordability. We're also working to curb gentrification and displacement and expand access to housing with what we're calling lasting affordability, and doing all of that while using intentionally a racial equity lens. Our really talented staff team provides a very wide range of inclusive and shared equity housing focused policy expertise and leads advocacy efforts at the national, state, and local levels. We conduct housing policy and program research to support our members, municipalities, and advocates across the sector. And I should mention that today our membership includes a wide range of types of organizations and housing advocates, over 200 members scattered all across the country and in Puerto Rico, as a matter of fact. And we also provide them with access to specialized products and services like our customized Homekeeper Housing Portfolio Management Database tool. That work supports a growing number of institutions and organizations who are directly managing affordable homeownership programs. We also, very importantly, provide capacity building and technical assistance support to increase the impact of community-led shared equity housing programs across our network. And that might be serving community land trusts, Habitat for Humanity affiliates, municipal housing programs, community organizer-led efforts as well. And I just want to touch on part of the rationale for why we're doing this. Our research, our great research team has put together data that shows on average shared equity housing programs are serving households making 63% of area median income, and 43% of those lower income households are led by people of color. That's a great statistic, but we need to expand access to shared equity programs because our data also shows that today the number of shared equity homeownership units is relatively small, just over 250,000 across the nation. And the largest segment of those are being produced by cooperative housing organizations. However, by contrast, data also indicates that even before the COVID-19 pandemic, over 37 million households were spending over 30% of their incomes on housing. And that includes 14% of those households who were severely cost burdened and spending over 50% of their incomes on housing. We need that to change, and we need to work all together in order to create a transformation of the housing system so that the scale of the solutions that we're proposing actually addresses the scale of the problem. And so that led me as the leader of Grounded Solutions in 2019 to propose a challenge to our members and partners like Neighborworks, the National Housing Conference, and many others to really scale lasting affordability over the next decade and try to achieve 1 million additional homes with lasting affordability while using a racial equity lens. We see that at Grounded Solutions as an opportunity to expand access to homeownership and directly address the racial wealth gap. All of you are likely familiar at this point with Richard Rothstein's excellent book, The Color of Law, and that really makes the case. Structural racism is rooted in our housing policies and has excluded Black families and other families of color, resulting in today's growing racial wealth and homeownership gaps. Historically, housing policies resulted in redlining and restrictive covenants that reinforced structural racism and was used to keep certain neighborhoods both white and highly valued. The evidence of that is in data. The Brookings Institute actually released a report in 2020 that states 171,000 approximately is the net worth of the typical white family, which is nearly 10 times greater than that of a Black family at just over $17,000. And those were 2016 numbers. And that divide is only increasing over time if we let it go unaddressed. As a result of our history of restricted and uneven access to homeownership for Black and other families of color, that's combined with a very limited supply of affordable homes today. And the homeownership disparity between white households and Black, Hispanic, and Latino households is continuing to grow unchecked. I'm going to transition a little bit from sort of giving that sort of context to really drilling into a specific case study around community land trust model. And the one I've selected is in Memphis, Tennessee. It's the Binghamton Community Land Trust. And so the context for this example is that the Memphis metropolitan area has a shortage of just around 38,000 affordable housing units, according to a report that the city of Memphis released in 2020. The Memphis neighborhood of Binghamton has in the past specifically struggled with poverty, abandoned homes, and the ravages of disinvestment. And that's not an unusual case, unfortunately, across America. That particular neighborhood is also majority Black, as happens to unfortunately be the typical case for many places and communities around our country. The neighborhood has also embraced and become home to a significant immigrant community. However, in the past decade, Binghamton has transitioned from a neighborhood that no one considered to be a good investment to a place that now private developers look eagerly to for new opportunities. Homes in that neighborhood are now selling for as much as $400,000, well above the median home price for the city of Memphis. In 2018, the Binghamton Community Land Trust was founded as a community-led affordable housing initiative. Through acquiring, rehabbing, and reselling blighted housing and property using the community land trust model, the CLT is keeping the neighborhood affordable for long-time residents and accessible to families who are facing the potential impact of gentrification that is happening in that community as the economic shift takes hold. How did that CLT come to be? As part of our really strong and great active partnership with Neighborworks, our Grounded Solutions team of experts provided technical assistance support to a local nonprofit called United Housing in Memphis to plan and launch the Binghamton CLT. Our support included making presentations to local stakeholders, including the city, county, and state policymakers, to help them understand what the complexities of the concept of a CLT involved and its benefit in achieving their goals. We supplied expertise and advice in the creation of their CLT legal documents, which are based on our Grounded Solutions templates and best practices for such things as a long-term 99-year ground lease, the bill of sale and deeds that are associated with the home purchase transactions. We also provided general education regarding the use of resale formula types. How do we keep the homes affordable over time? How do you split the amount of equity that builds up in the home between the nonprofit community land trust home program and the homeowner who may eventually decide to sell? And you have to balance the preservation of long-term affordability with the amount of individual wealth creation that takes place upon resale. And so their progress to date is that the CLT closed on their first home in October of 2021 and has most recently been invited by city leadership to have a discussion about forming other CLTs, expanding eventually into a citywide collaborative network of CLTs, potentially using the federal home program grant dollars that the city receives to, again, increase access to homeownership for folks living in neighborhoods throughout the city of Memphis. The Binghamton CLT is already targeting larger parcels of land for their next development and working with the county land bank to secure land for affordable homeownership. Land banks have become natural partners for CLTs, given their function of really bringing sometimes vacant or blighted property back into productive use for community benefit. And one of the great avenues for that is affordable homeownership. Grounded Solutions is ongoing in our support in Memphis and really focused on engagement with local stakeholders to explore what that coalition of CLTs might look like to really achieve the expansion of the CLT model at greater scale in conjunction with our goal to scale the work over the next 10 years nationally. We have a number of similar active engagements to support coalitions in places like Baltimore and Louisville. In each case, resident-driven goals and priorities include preventing displacement of existing families, really in order to retain the unique identity of their communities. That is best achieved by creating a stock, in our opinion, of permanently affordable homes using the CLT model to create some level of individual wealth building and upward economic mobility. I also want to just pause here because I'll have an opportunity in the Q&A to share some more thoughts about how to be effective in scaling the work. So I'm going to turn it over to our next panelist, Kaya Peterson, at this point.
Thanks so much, Tony. I always love hearing from you and from Shanti. We're a Neighborworks America chartered member. We're a member of Grounded Solutions, and I see quite a few ROC USA colleagues on the call here as well. We wouldn't be able to do this work with all of those great partnerships. So just encouragement to anyone on the call, if you're not connected with those groups, get connected. This is the only way this work is getting done. So as Tony said, I'm Kaya Peterson. I'm the Executive Director of Neighborworks Montana. I'm going to share my screen here real quick. And we are a statewide organization. We've been around for over 20 years, and we were really founded to support home ownership for low and moderate income folks across the state. So we have a long history of providing housing counseling and education, a long history of being a community development financial institution, a CDFI, that provides down payment assistance and development lending. And about 10 years ago, we really got motivated to get engaged in shared equity work, primarily because we were seeing folks in manufactured home communities getting displaced for redevelopment. So that is really our first foray into this work. If you're not familiar with resident-owned communities, it's a really fantastic national model that was established first at the New Hampshire Community Loan Fund, and then expanded nationally through the work of ROC USA. Like I said, Neighborworks Montana started working on this program about a decade ago. And what we do is we work with residents of manufactured home parks to help them form cooperatives and buy their land. And in the language that Tony and Shanti used, this is a limited equity shared limited equity, shared equity approach, where the residents together purchase their community and manage it for long-term affordability. So our role in this is really as a technical assistance provider to help the residents form the cooperative, establish their governance structure, and also to work with the property owner to negotiate a viable sale. So in most cases, we're working with the property owner first, coming to an agreement on a viable price, and then organizing residents. It takes a lot of things all happening at the same time to make these work, but it's pretty incredible when it all comes together. And there are a lot of really great systems in place to support that. So I think some of the key elements there are having a strong organization with that national support, that we can provide the support to the residents that they need. It's a huge learning curve for them. Most of them, when you first knock on their door and say, hey, your community's for sale, would you like to buy this property? They roll their eyes, or they scoff, or they laugh, or say something about how that is a completely impossible proposition. And then once you get to talking, that transforms this idea that they thought they would always be renters. They thought that they would always be living in housing that was at risk of being displaced. And then they get to the closing table and they're the ones signing on a $1 million+ project. So it's a pretty exciting transformation. What the model does is it preserves existing affordable housing. This is manufactured housing is one of the largest sources of unsubsidized housing, affordable housing in the country, and particularly in a rural state like Montana. This makes up a pretty significant portion of affordable housing in the state. And as you can imagine, in the current market, a lot of that housing is at risk for redevelopment. So this model provides housing stability, housing affordability. We also do a lot of work with residents on infrastructure improvement and community improvements based on what their needs and interests are, and then leadership and community engagement. So you heard some things from Tony and Shanti that it really resonated for me. We do this work because it provides resident autonomy and leadership, it provides community control, and it provides long-term affordability. And that trifecta of impacts and of long-term impact is really what makes this a powerful model. So in Montana, we now have 15 resident-owned communities across the state, serving over 600 homes and 1,300 residents. So when you hear Tony talk about scale, and I know Paul Bradley from Rock USA is on the call, he's a big proponent of scale. This is part of what we're talking about. How do we take these models and really put them to work efficiently and effectively all across our state and all across the country? And nationally, here is the current Rock USA network footprint. 20 states, over 19,000 homes, and 287 communities. So I wanted to share just a couple of other examples. Since we've done this work and since we care so much about homeownership as a fundamental kind of value and empowering opportunity for people, and as homeownership has become further and further out of reach, we continue to see shared equity models as a really important stepping stone and opportunity for people who would not otherwise have an opportunity for any form of homeownership. So one of the other approaches in Montana is community land trusts. You heard both Tony and Shanti talking about that. And I just wanted to share one example of a land trust in Montana. This is a partner of ours, and it's the Big Sky Community Housing Trust in Big Sky, Montana. For a little bit of context, I wanted to share with you, I know some folks look at Montana and they think, you guys can't possibly have an affordable housing crisis. You're a rural state, it's got to be affordable to live there. If you're moving here from anywhere along the coast, you look at our housing prices and you think, oh my gosh, that's a dream. I can still buy a single family house for under $500,000. Yes, sign me up. But in Montana, those prices are extremely unaffordable. So Big Sky, Montana, if you're not familiar with it, it is a resort town. It's where Big Mountain Ski Resort is. It's one of the gateways to Yellowstone National Park. the median household income is $75,000. When I look at what the median available homes for sale are in that same community as of January, the median sale price is 4.6 million. This is an extreme case. And some people would say, it's fine. People who work there can just drive over the mountains. They can live in the next town over. But fortunately, many of the folks who live there have said, that's not good enough. This is our community. We want to be able to work here and live here. And that's part of where the Big Sky Community Housing Trust Fund came in. So they recently, in the last few years, developed a condo development of 52 units and sold all of those through the land trust. And they have a lot of great information on their website if you're interested in digging into this model more in terms of how they structured the sale, the size of the units, the financing structure. They have a lot of great information you can dig into here. Part of what made this project work is they had donated land. They also had some designated local financing. Because it's a resort town, they had access to resort sales taxes, which is really unique in Montana, really limited state and local funding sources for affordable housing. But in this case, they were able to use that local resort tax. And then they had a nonprofit development partner who came to the table to help with the development. And then Neighborworks Montana's role was really as a CDFI, they contracted with us to help support the down payment assistance that they also layered into this project. So in the end, they were able to sell these units for a studio was $155,000 and a 2-bedroom was $320,000. So again, when you look at what's available in the market versus what a shared equity land trust model could provide in a very difficult environment, it's pretty impressive and exciting to see. And then the last thing I wanted to share is just one other example of sort of where we're headed next. We have a pilot project we're working on with an 8-plex apartment building. We're partnering with a local land trust organization called the North Missoula Community Development Corporation and looking at whether a community land trust combined with a cooperative would provide, again, that resident control and that resident opportunity and long-term preservation. What we're really being driven to look at other ways that we can apply what we've learned in the resident ownership model, apply what we've learned in working with community land trust partners across the state, and really continue to fill some of the needs we're seeing on the ground. In the community I live in, Missoula, Montana, there are a lot of older, smaller, multifamily apartment buildings, and they're getting snatched up by local investors and outside investors who are able to flip those into more expensive condos or more expensive apartments, or even just come in and buy them and increase rents from levels that they've seen historically. So in the case of this property, rents have been below $600 a month. If someone were to come in and buy it without doing a single thing to the building, they could be renting most of those units out at $1,000 or more a month. So real risk for displacement of current tenants. And with a vacancy rate in this community of below 1%, most of those folks would really have nowhere else to go. So we're excited to explore that further. We have had the benefit of learning from some other land trust and cooperative organizations across the country, and we'll keep you posted on how that goes. But happy to share more during Q&A, but hopefully that gives you a flavor for some of the approaches that are working on the ground. And I'm going to turn it over to Jenny Ortiz from NPHS in Southern California for some of their work. You're muted, Jenny.
I'm mute. Okay, sorry about
There
that.
we go.
Hi, hello everyone. Let me just pull up the PowerPoint. Okay, so neighborhood partnership housing services. This presentation is focusing on increasing affordable homeownership opportunities with CLT factory-built housing. So we have been here, Southern California, we just celebrated 30 years. part of the Neighborworks America umbrella. And of course, we're all about trying to preserve affordable housing in Southern California. Some of the current housing market trends: California has one of the highest costs of living in the country. Inland Empire, located in Southern California, is our target region. We have 2 combined counties, which make up San Bernardino County and Riverside County both, make up about a combination population of over 4.63 million people. So we target a very large array, rural, urban, suburbia, what have you. Okay, there's a lot going on here in Southern California, specifically in the Inland Empire. We're a very, very, very high growth region for real estate as well. As of January 2022, recent statistics show that median home prices range between $450,000 to $590,000, compared to the state's median of about $765,000 to $580,000. For us to work with the NPHS, for us to create a community land trust, we had to go through quite a bit of education, training, learning, accessing the resources that Neighborworks America provided to us. A lot of the ones that were mentioned today, we tapped into, so we're very, very thankful. We created this as part of our holistic framework. The ultimate goal, again, is to preserve and protect affordable homeownership for LMI households in perpetuity. Our first CLT property was part of a Fannie Mae pilot collaborative. We have in-house an acquisition, rehab, and resale program where we purchase discount properties, and we were able to work with Fannie Mae on this particular home, as you can see in the image. By applying the subsidy retention tool, we achieved permanent affordability by limiting, again, the price for which a family can resell their home, as mentioned earlier. By acquiring and transferring the land to the CLT, we maintained ownership and control of the land cost by permanently limiting the land cost and locking in that subsidy of land value. So NPHS CLT Stewardship Program, we created this program to maintain communication and provide other LMI resources and referrals to our owner. This home at the time, back in June of 2020, was sold to an 80% AMI LMI first-time home buyer for $230,000. This individual was living in a household literally with 3 children and him living on the couch. So it was like he was renting a space in a family relative's home, and so he was extremely excited when we were able to help him out with this home. We were also able to provide grid alternatives as a partner, provide this individual homeowner the free solar at no cost, so he's excited. He just got that installed last week. Challenge, with the challenges that we see with the cost of home prices rising, just like everywhere else, shortages in labor and construction materials skyrocketing. How can we make scattered infill development sites sustainable and scalable by using CLT and factory-built housing solutions? We see the opportunity because we can use a CLT model and a factory-built home. We can partner with local or county housing authorities to identify these residential surplus lots. In most cases, these blighted lots can be redeveloped and turned into sustainable, affordable homeownership opportunities for LMI families. So using the CLT model with factory-built homes offers cost benefit of a design-build process for us that facilitates innovation, quality control, including energy and waste efficiency standards. We created Homes by NPHS LLC, which is a community development social enterprise, and it's the exclusive entity that is a factory-built retailer. We decided that it would be best to be able to purchase these factory-built homes at a wholesale price to lower the development costs, and then have a retail channel to sell them off to affordable housing developers that are wishing to do the same thing that we've been doing in our infill developments, and also to consumers. We've put together a CDFL loan product to help finance ADUs, because ADUs have become, they're in such high demand in Southern California, or in California today, that it's become a really good product for purposes of housing family and relatives and potentially building a little bit of wealth for single family owners. Garage conversions are happening like no other time, and these ordinances are becoming a lot more flexible for people to be able to install ADUs that are factory built. We also thought, hey, it'd be good to be able to do a mobile home replacement program. We've already have in-house, we have a home improvement program that's already tailored, and we see the dilapidated homes and mobile home communities, and the programs are not geared towards replacement, but instead improvement. So we're looking to figure out ways to help these communities replace these dilapidated homes. So with that said, we decided we want to be able to do a demonstration site where we build, we have our parcel, we have our own 10,000 square foot parcel. We've owned this for some time. We decided let's just go ahead and factory build single family and ADU infill. And these are some of the images we have. We, obviously through various engineering brainstorming sessions and city brainstorming sessions, we had a lot to go through to find out what does it take to have a factory built and an ADU built out. In the city of San Bernardino, we're used to just doing one home at a time. This is our demonstration with 2 homes. Basically, the ADU and the single family and ADU unit, will cater to a family that will offer 3 bedrooms, 2 bathrooms for each, 2 bedroom, 2 bath for the ADU. We definitely intend to provide parking, which could be a challenge in some of these cities, but we do want to provide solar panels. We want to provide end-of-their storage. We want to do this demonstration site development as an we want to have the opportunity to research everything that has to go with a single family and an ADU factory built challenges, so that we can then report back and share these findings, nationally and locally, and share them with our partners and city municipalities. Lessons learned. We're still learning quite a bit of lessons, which is, the best part of experiencing new development is you're constantly learning about single family development or ADU developments, in this case, utilizing CLT models. For the development that we just shared with you, we're looking at potentially renting it out for 3 years and leaving it as an option for lease to purchase for that family or household that will be renting it. And we're currently looking at ground leases for 99 ground year lease structures that we can then turn this particular site into a 99 ground year lease concept through the CLT. So we're closely working with, our resources here in the city of San Bernardino are excited to also see this project go into fruition. But there is misconceptions and negative stigma that CLT models and or factory built homes bring to the table. So we look at it as an opportunity to educate municipalities and consumers. Building relationships and networks with local factory built plants and licensed contractors alongside with local retailers. Building this network to help the social enterprise grow and expand is of critical, it's also critical. And then of course, keeping up with construction costs and increasing supply and demand for factory built homes. Unfortunately, well, with the whole situation that happened in the Midwest, it was, unfortunate for so many households that were impacted by these storms. And so we're looking at, backlog right now, and there has been, we'll talk a little bit about how COVID has impacted these industries and our goals to grow even faster, I guess you could say. But this pretty much concludes my presentation. I believe we go into Q&A.
Yes, thank you so much. Those were wonderful presentations, and I wish we had more time, but I do have a few questions. I'd like to invite all the panelists to please turn on your cameras and unmute yourself. And A question that I saw in the chat that I think is probably a lot of people listening to this might be wondering is, the question raised concerns about the residents not having the same wealth building opportunities that they would if it was conventional homeownership. And I'm sure you all get that question a lot. I'd love to just go around and hear your answer. Tony, I saw you nodding.
Yes, thank you. I was just actually typing a response into the Q&A function. I just want to say it's a common misconception that shared equity prohibits wealth building. We have data that proves that shared equity homes actually do allow for a limited and, in our opinion, reasonable amount of wealth creation. For example, across a sample of 3,000 shared equity homes, the median initial investment that a home buyer makes in purchasing the home was around $1,800 compared to the median amount of $14,000 that a shared equity homeowner would be able to take out upon sale. That was proven by data to be sort of the outcome of shared equity homeownership. And the majority of those shared equity homeowners who elect to sell typically do that within a 5 to 7 year period, with 60% of those families moving on to purchase an unrestricted market rate home. So you've got the economic mobility, upward economic mobility that we're always seeking to try to make possible for families happening with the shared equity model. So thank you for the question. That would be what I would say about it.
Any of the rest of you have an answer to that? I'm sure you've discussed this with families when you explain your model.
I think also, it also could depend on the real estate market you're in. The local real estate market here in California has just been outrageously high in terms of, appreciation. So with that said, it's important to take into account, the property tax as well. So we also look at the opportunity of, for example, the home that I shared, this individual came in, didn't have $10,000 for down payment. We were able to just ask for 1% down payment. Property was sold for $230,000. Those reserves that are allocated for long-term maintenance and, servicing the home. We did a $40,000 rehab job on the home. So all these subsidies that go into the value of preservation of home ownership may not seem like a wealth building opportunity, but in the long term, I'm with Tony that, if the home does appreciate, you see that appreciation, but yet we tie it to the area median income of the next buyer at 80% AMI, and that same buyer can still purchase this home at an affordable price. And hopefully, if improvements are made, we look into those as well. There is a limited, but nonetheless, some wealth building is there.
That's Kaya. Shanti, do you have anything to add to that, or should we move on?
I would just say that, yeah, most of these models do limit the equity. So if someone can afford to get into the traditional market, they will have more equity opportunity, most likely, if prices continue to rise. But like everybody said, it's a stepping stone, and it is a way to build wealth and create an entry point.
That's helpful. Well, another question I was wondering is, what can federal policy do to help scale up shared equity programs? Tony, what would you like to see the federal government do?
Yeah, well, Chris, as you know, there's no one silver bullet thing that the federal government can do. And I think we need a coordinated set of federal policy changes to really open the door for shared equity models to move into what I'll call the mainstream of the bigger affordable housing ecosystem. We really need things like HUD to issue clarifications to actually simplify access to the home program for shared equity practitioners. That's one of the #1 barriers that our members are identifying to us. Really, the regulations allow currently for a lot of varied interpretations, especially around this aspect of subsidy recapture, which HUD requires, if you're going to subsidize a home with public money, that you recapture that money if the homeowner decides to sell, versus subsidy retention, which is what the shared equity approach is based on, keeping that equity in the home and making it affordable for another family without injecting additional public subsidy in the same home.
Okay. So you unmute. Do you have thoughts on that?
I was just going to say to add to that is that from our perspective at Neighborworks, we've been really fortunate and grateful to receive a dedicated $5 million in congressional appropriations to support the spreading of this model and the capacity building. And we definitely see that the demand for capacity building and capital resources is far outstripping what's available out there through a lot of resources to get groups up to a point where they can run a shared equity program. So I think we'd hope to see that appropriation grow and continue to serve the field to build more capacity in this area, and also to help us educate different players in the field around whether it's real estate agents, appraisers. We often see that these various community members and stakeholders that need to understand shared equity, housing counselors, et cetera, need education opportunities, more exposure to what these models are trying to achieve and who best is served by them. And those are all things that, we could really continue to hold up and distribute as resources as Neighborworks.
That raises an interesting question, I think, for Jenny and Kaya, and I think this is going to have to be the last question, but what kind of local barriers do you see that need to be overcome to help this model have a larger scale?
You want to talk first, Kaya? No.
Go ahead.
Oh, okay. So one of the learning curves that we learned about was working with our tax assessors and having them understand a CLT model. You would think in San Bernardino County that it's prevalent, but no, it was not. It was one of maybe the last one they saw was 20 years ago, and we had so many different brainstorming sessions that it was really, really helpful to, get consulting, get everyone on board, involve all the players. The appraisers were highly involved with the ground lease descriptions, the restrictions on those ground lease. Everything was very. It was such a good learning experience. So I would say that one of the challenges would be, getting our tax assessing appraisers, tax collectors, everyone who's in that field to participate from the get-go, so that you're not waiting till the very end of the home being sold and transferred. It's something that I thought would be, for our next CLT, we definitely are going to be heavily in communication with the county tax assessor's office and any paperwork that needs to be drafted and so forth. So yeah, that for us was a barrier, but nonetheless, we overcame it. And thankfully, with that said, though, the stewardship concept is very heavily praised upon, I think, because of the fact that, these individual households may not understand property taxes. And we had a perfect example where they call us and they ask us, what are supplemental taxes? What are these about? They may not know, but these are the kinds of things that we can work with our county representatives to help the individual homeowners, of course, get on a payment plan if they, are not on a payment plan or don't understand it. But it's a lot of communication. So yeah, we're diligently working on building those relationships.
I would just add, certainly in the development space, folks are probably well versed in what some of the barriers and opportunities are there. I would just say, in terms of directly impacting shared equity work, our focus is primarily on preservation of existing affordable housing using these approaches. And what's really helpful there is having any local resources or government resources that are flowing through local municipalities placing a value on long-term affordability and placing a value on these approaches so that we know that those dollars are going to be staying in play and preserving long-term affordability.
Right. We are over time. There was an enormous response, lots of questions. So I would encourage participants to reach out to the National Housing Conference, to reach out to Neighborworks, to reach out to any of our speakers with additional questions. And I will ask David Dworkin to turn on his camera to close us out.
Thank you. Thank you all our panelists. Thank you to Chris Siglin for all of your work on this project and this, what a great moderator. And thank you to Kirsten Johnson Obi for all of your leadership at Neighborworks and support, and to all of the NHC staff, especially Brittany Webb, who did so much work on this project, and Luke and Villalobos, and also Erica Ramirez, Henry Weiss, and Allegra Tasaki. If you don't know them, you should definitely get to. We love working with all of you and look forward to our next webinar with Neighborworks.